Hey, what's up, guys? It's David from Genzio. We are here in Bangkok, Thailand for Devcon. This is the GM podcast, and I'm here with Phil from Cork. Phil, how are you doing?
I'm doing all right. How are you?
Good, man. It's a pleasure to meet you.
You too.
You are here in an exotic fit that I think only certain people could rock, and you surely can.
Yeah, thank you.
Yeah. So let's get right into it. Cork.
Yeah.
Tell me about Cork.
Yeah, so we're building credit default swaps for pegged assets. And so I know most people, when they hear credit default swaps, the first thing they think of is the Big Short and how uncollateralized credit default swaps with unchecked counterparty risk almost brought down the global economy in 2008. But in reality, credit default swaps are a $30 trillion market that's fundamental to pricing and managing risk on the world's largest markets, right? The credit markets, which is over $150 trillion. And so we started thinking about Cork and how do we actually build something today that can solve a real problem in crypto, but also serve as a catalyst to bring that entire market on chain. And so what we identified was the pegged asset market. Pegged assets are a huge driver of growth in crypto and DeFi specifically. There's hundreds of billions of dollars of stable coins, liquid staking, and liquid restaking tokens that are now growing exponentially, but all of them have different levels of risk. So some of them have traditional credit risk, right? As we all learned last year in March when Silicon Valley Bank collapsed, right? That stablecoins do have real world credit risk. But all of these different pegged assets have layers of stacked infrastructure risk that right now the market has no ability to price or hedge.
Okay. Nice. So how did you get from, before Cork to, okay, we're going to start this, we're going to get this going. What was the journey?
Yeah, so I started my career actually trading derivatives on Wall Street and then got into crypto in 2012. I initially started doing arbitrage trading on Bitcoin. I was mining some Litecoin in my office. And then in 2016, 2017, got into proof of stake and was building staking infrastructure. Back then, the joke was that the Ethereum was going to go proof of stake in 6 months, right? That 6 month period lasted several years. But we started building the infrastructure for it. And then ultimately, I actually went down a carbon credit rabbit hole in 2020 and was one of the co-founders of a company called Flow Carbon that was trying to build carbon credit infrastructure on chain. And part of what I was thinking about at Flow Carbon was if you brought the primitive, the carbon credit, on chain, and theoretically this is something that needed to be created at mass scale, right? And it was going to need a multi-trillion-dollar securitization market. If the primitive could live on chain, could you actually build a full stack crypto native ecosystem to do that securitization? And what would that ecosystem look like? And credit default swaps was one of the things that I started thinking about. And when I started talking to my co-founder, Rob, who was also a founder in the Web3 carbon space, he earlier this year was very concerned about pegged asset liquidity. And we started thinking about it, and that's where we sort of got to this place where it's like, oh, there's a real problem here today with pegged assets and pegged asset risks on chain. But we could also design something as we went back to like first principles and thinking about the problem space and how to design a protocol to address that could actually also bring us serve as a catalyst to actually bring the entire CDS market on chain eventually, right? It's going to take some time. It's not going to happen tomorrow, but I guess, with all the exuberance in the last few days, maybe it will happen tomorrow.
Yeah. I mean, Rome was not built in one day. I've said it before, I'll say it again. So, but in this space, some things can be built pretty fast.
Yeah, I mean, I've been talking to institutions about crypto for about 8 years now, right? Started having conversations back when we were building staking services, trying to get insurance companies to write policies for custodial services and trying to get institutional adoption even then of like, oh, hey, we have these, rates that you can earn by holding these assets that are going to hopefully go up, but also you can get some yield at the same time. And it's been years of institutions being like, all right, these people are crazy. Then being like, okay, they're not so crazy, but like, come on, leave us alone. We're not doing this too. In the last few months, like I think institutional adoption has sort of like turned a corner. And I think like the DeFi renaissance that is sort of like a buzzword right now is actually going to be about institutional use of DeFi, especially as you get regulatory clarity in the US.
Okay, all right. So one thing I'm curious about is Cork's thesis. I'd love to hear about that.
Yeah, so I mean, I think our mission is to accelerate the adoption of on-chain credit, right? And so, pegged assets is sort of this, not everyone thinks about a pegged asset as a form of credit, right? As I mentioned earlier, stablecoin can be very credit-like, right? It can be backed by bonds, right? Treasury bonds or money market funds off-chain, right? Which basically is just a credit product that's been now moved on-chain. You can also have pegged assets that look like credit, right? So like a liquid restaking token kind of has some credit-like properties in that it pays a yield. There's a principal that's supposed to be able to be gotten back very easily. And so it has credit-like properties. But if you think about what the size of that market is versus the credit markets and the off-chain CDS market, our thesis is that if you create this utility function, right, a credit default swap-like product that lives on-chain and that can be easily created on-chain, that you can actually drive more credit on-chain because there's a reason for it to come on-chain other than the normal efficiency and accessibility gains that you get by issuing credit on-chain. And so seeing more private credit being able to be issued on-chain, because now another thing that they can do on-chain that they couldn't do off-chain is have a credit default swap, right? Because if you think about what creating a credit default swap on-chain is an incredibly expensive proposition, right? It's only done on the largest credit issuances.
Yeah.
It costs, could be upwards of $1 million or more to actually structure and create and sell the product. Imagine now if you could do that for like $50 in gas, right? All of a sudden you could have a credit default swap on a very small bond issuance that could potentially use it as a real means of helping them to raise capital.
Maybe that's something you could do.
Yeah.
Yeah. Why
I mean,
not?
that's the idea. The protocol,
Right?
like we're starting with pegged assets, right?
Yeah.
And that's where there's an immediate need and opportunity for in the space. And like we really are laser focused right now on that because there is no way to price risk on pegged assets. There's no way to hedge it. There's no way to trade it. And even the like sort of proxies for the ability people do have to like sort of trade some of these things is not efficient. So this creates a level of efficiency and starts to build out a risk tooling stack for DeFi. And right now, I think that's what's going to help bring institutional adoption is having more and more risk tools on chain because traditional money managers and traditional large scale institutions, risk is really important to them, right? Like you look at your current batch of crypto investors and crypto capital, it's a very risk-on group of people, right? These are not people who are looking to mitigate and hedge risk necessarily, but that's not the next $1 trillion that's going to come on chain, right? Those are going to be people who actually really are very, very risk-focused, and right now there's just not appropriate risk tooling.
Yeah. Okay. Yeah. I mean, you said something simple is using it with gas, right? That's something that would gain people outside of the community, right? Get people that are maybe not as user friendly to be more interactive with that. And that's something I think is fantastic.
Yeah, I think you're seeing more and more private credit being issued on chain. So small, $50, $75 million or smaller even issuances of credit where it's just a bond that's structured. And people are doing that more and more on chain because it's much more efficient to do it on chain. You have greater accessibility for who you can sell those things to. But right now there's not the traditional tooling for it. And so if you create, again, this utility function of like, off chain, I can't create this, but on chain I can. And that will drive more credit on chain.
More.
Yeah.
Cool. So one thing I also want to touch on is your recent experience with A16Z Accelerator.
Yep. Awesome. Yeah. The crypto's like startup accelerator is great. It's a very like focused period of time where you get to go through sort of all the different functional areas of like building a startup in crypto and really workshop with some of the leading experts in the world on each one of those areas, whether it's go-to-market, communications, marketing, legal, tokenomics, you name it, right? A lot of those people are either in the A16Z network that they bring in or actually work at A16Z already and are there to like just literally just go through. And so like, even though we came to this with a lot of ideas about how we were going to do each one of these things already, like doing a round of workshops with some of these experts, like really just like, oh yeah, it clarifies or it changes the way that you think about these things, especially giving out like really good frameworks for how to approach and think about some of these early stage activities.
Okay. Yeah. So a good experience.
Overall, yeah, great experience.
Fantastic. Yeah. All right. Nice, man. Nice. That's definitely something maybe we could look into as well.
Yeah, for sure.
One thing I want to touch on, the fit, man. Tell me about the fashion.
Yeah. So,
definitely, you're inspired.
Yeah. So this is actually a like side project that I've been working on inside of the Celo ecosystem. Huge fan of the Celo ecosystem. Very mission driven, aligned community and blockchain, and I've been involved in the community for a long time, and was really I'm swag obsessed in general. And
Yeah.
so we came up with this idea.
I mean, we can see that.
Yeah.
Yeah, yeah, yeah.
So the idea here was to start an experiment in decentralized swag. And so the idea behind it was we just took a bunch of different stickers from the ecosystem. This one we sort of curated ourselves, put them on there, sold them to people in the ecosystem, and then everyone's getting an NFT who bought one. And so now the next round that we're going to do is going to be actually voting, where you can vote with the NFT as to which projects or which stickers get represented on the swag. And then over time doing more progressive decentralization, where ultimately you lead to like this experimenting, like can a community come up with and design swag in a decentralized manner? So just sort of a fun little experiment in that.
Yeah, no, it's awesome. It's something, I'm not really much into fashion, but I think I dress all right. But, sitting next to you, you got me feeling some type of way. I'm like, man, I need to step it up a little bit.
We're going to get you one.
Oh, okay.
good.
I'll take you up on that.
Yeah.
So do you maybe see yourself moving more towards a designer and, going down that alley?
No, I think I'm pretty focused on like building in DeFi, not necessarily like being a fashion designer.
Yeah.
But I do fancy myself an aspiring crypto fashion icon.
Okay. All right. Nice. Well, we'll go back to Cork.
Yeah.
Where do you see Cork in, down the road, 5 years?
Yeah. I mean, I think that we're trying to build out risk tooling. And so I think if we can help to bring out risk tooling both for crypto native assets and real world assets, that's a huge win. And so ultimately, what I'd like to see is as we build out versions of this that become more and more institutional and more focused on, I mean, obviously, again, laser focused on the pegged asset market right now, but if you're looking out 5-10 years, looking at the overall credit market, how can we bring a currently $30 trillion market? How do we serve and grow that market and bring it on chain, right? I think, sort of the dreams of, from 2016 onwards of like thinking about what you could do with Web3, right, was you can really disrupt a lot of different industries, but my background is finance, and so that's sort of where I've always been like paying attention to, and being able to think about how do you actually bring these things on chain. In 2016, 17 was like a total pipe dream, right? And now it's starting to be like, oh yeah, this is actually possible, and not only possible, it seems inevitable, right? You will see credit default swaps trading on chain, and that the market will primarily live on chain 10 years from now. The question is, what's the driver and how fast does that happen? So we're hoping to be that like catalyst.
Okay. Yeah. Fantastic. There are a lot of people outside of the space, right? Maybe that are just outside the circle and maybe they need a little bit of guidance or any advice. Is there any advice that you would have?
To who? To people building in the space?
People outside that maybe want to get involved.
Oh, I mean, first of all, I think crypto has become much more approachable, right? Whether it's buying your first asset on Coinbase or using like very simple applications that have crypto in the back end like Blackbird. I think just don't be afraid to experiment with it. Don't like take it too seriously at first. Just try and find a fun way in, right? Go and buy an NFT. Don't necessarily start out by, if you're brand new to crypto, brand new to finance, don't necessarily start out with Cork. We're building like sophisticated tooling, and hopefully we make it really easy for people to use, but it maybe not be the first place for people to start. But there's definitely a lot of more and more fun projects and ways for people to get onboarded into the space and ultimately start using it in different ecosystems.
Okay. And, attending Devcon and, being here in Thailand, obviously, main objective probably is to continue to build community and that sort of thing. But is there any other alternative motives that you had in attending this?
Well, I definitely wanted to come to Bangkok, right?
Yeah.
That was definitely an ulterior motive. No, but I think, building relationships in the space is, really key. And it's sort of, I think one of the like really nice things about the crypto community is that, a few, sometimes too many times a year, but definitely a few times a year, we all sort of get together in these great cities and just get to like learn and interact with each other. And that's just really an amazing, like, I don't know of any other industry that's like that, where you actually have everyone sort of coming together and being really collaborative and friendly and approachable, so that you can go and like, either whether you're sitting in on a talk and trying to learn about something new, or you're hearing about like cutting edge research that frankly goes over my head at this point, or you're really just getting to interact with people to like share their passion. It's just an amazing opportunity to do that.
Yeah, I agree with you in the sense that, myself, right, I'm constantly educating myself. And jumping into the space, and there's zero problem with going and talking to anybody. It seems like everybody's very approachable. It's very easy to talk to, and encouraging. It's encouraging. Yeah. So I just want to say thank you very much for coming. Where can we follow you guys?
Yeah, my pleasure. You can follow me on Twitter, Philfog, PHILFOG. You can follow Cork Protocol. You can check out our website, cork.tech.
Cool, man. Thank you so much.
Thank you.
Yeah.
It was great.
Hey, what's up?
But it's not something Genzio is afraid of.
If you want to survive, you got to build a hive.
You know who do not understand that we need more.
Ladies and gentlemen.
Get back at the Genzio Media House.
Awesome. Well, thanks so much for joining us today.